Imagine there's a single financial mechanism so deeply wired into the global economy that almost every country on Earth is forced to play by its rules, whether they like it or not. It doesn't make headlines every day. Most people have never heard of it, but it quietly influences the price of your groceries, the cost of your flights, and even which countries the United States goes to war with. It's called the petrodollar system, and once you understand it, you'll never look at global finance the same way again. To understand the petrodollar, you first need to understand why oil is essentially the blood of modern civilization. We burn it to fuel cars, cargo ships, and aircraft. We turn it into plastics, fertilizers, and chemicals. In many parts of the world, we use it to generate electricity. Without oil, the global supply chain collapses. Factories stop. Farms stop producing. Modern life, as we know it, simply stops. Because of this, there is a constant and enormous flow of oil being bought and sold between nations every single day. Some countries sit on massive oil reserves, like Saudi Arabia and the Gulf states. Others, like Japan and South Korea, are industrial giants that consume enormous amounts of oil, but produce almost none of it. This gap between producers and consumers creates one of the largest trading markets in human history, and at the center of that market sits the United States dollar. But how did the dollar get there? To answer that, we need to go back to the wreckage of World War II. By 1945, most of the major economies of the world had been devastated by conflict. Europe was in ruins. Asia was rebuilding from scratch. The United States, however, emerged from the war with its factories intact, its cities undamaged, and its economy surging. It was, without question, the dominant economic power on the planet. World leaders recognized this reality. In 1944, delegates from 44 nations gathered in Bretton Woods, New Hampshire, and agreed to rebuild the international financial system around the US dollar. Every other currency would be pegged to the dollar, and the dollar itself would be backed by gold. The United States essentially became the financial anchor of the entire world. That arrangement held for about 25 years. Then, in 1971, President Nixon made a decision that shook global finance to its core. Facing economic pressure and a draining gold supply, he severed the connection between the dollar and gold entirely. This became known as the Nixon shock. Overnight, the world transitioned from a gold-backed financial system to a fiat currency system, where money holds value not because it's tied to a physical commodity, but because governments say it does, and people trust that it does. So, with the gold backing gone, why didn't the dollar simply collapse? The honest answer is that the dollar was already so deeply embedded in global trade that switching away from it would have been enormously costly and disruptive. The US economy was massive. Its institutions were stable. And crucially, most international transactions were already happening in dollars. The dollar stayed on top, but now it needed a new foundation to justify its global dominance. That foundation arrived in 1973, in the middle of a geopolitical crisis. Arab oil-producing nations, furious at Western support for Israel during the Yom Kippur War, launched an oil embargo. They refused to sell oil to the United States and its allies. The impact was immediate and brutal. Oil prices quadrupled almost overnight. Gas lines stretched around city blocks. Inflation surged across Western economies. It was a wake-up call that revealed just how vulnerable the world had become to whoever controlled the oil. The United States responded with a deal that would quietly reshape global finance for the next half-century. Washington approached Saudi Arabia, the most powerful member of the oil-producing cartel OPEC, with a straightforward offer. Saudi Arabia would price and sell its oil exclusively in US dollars. In return, the United States would provide military protection, sell advanced weapons to the kingdom, and guarantee its security. The Saudis agreed, And because Saudi Arabia was the dominant force within OPEC, the other member nations soon followed. Just like that, the petrodollar system was born. Here's why this matters so much. If every country in the world needs oil to function, and oil can only be purchased in US dollars, then every country in the world needs US dollars. Think about what that means in practice. Japan needs to buy oil. Before it can do that, Japan must acquire US dollars. To acquire dollars, Japan needs to trade with the United States, hold dollar-denominated assets, or participate in the dollar-based financial system. The same applies to Germany, India, Brazil, and virtually every other economy on the planet. This creates a permanent, structural global demand for the US dollar that exists completely independently of how well the American economy is performing at any given moment. And that demand delivers the United States extraordinary advantages. It keeps the dollar strong. It lets the US government borrow money at lower interest rates than almost any other country on Earth, because there's always a buyer for American debt. And it gives Washington the power to weaponize the financial system through sanctions, because so many international transactions are processed through US banks. Now, what happens to all the dollars that flood into oil-producing nations? They don't just pile up in vaults. They get reinvested. This process is called petrodollar recycling, and it creates a fascinating feedback loop. Oil-producing countries take their dollar revenues and pour them back into the global financial system, buying US Treasury bonds, investing in American corporations, purchasing real estate, and funding global markets. The dollars go out to buy oil, and then they quietly flow right back into the United States. The cycle reinforces itself endlessly, keeping the dollar at the center of everything. But nothing lasts forever, and the petrodollar system is starting to show cracks. In recent years, countries like Russia, China, India, and Venezuela have been making deliberate efforts to conduct oil transactions in currencies other than the dollar. This is one of the driving ambitions behind BRICS, the growing alliance of major emerging economies that seeks to reduce the world's dependence on American financial infrastructure. So, why hasn't this shift happened faster? Because dismantling a system this deeply embedded is extraordinarily complicated. Switching the currency you use for oil trading isn't just a matter of changing a payment method. It means renegotiating contracts, restructuring hedging instruments, overhauling insurance arrangements, and rebuilding pricing models from the ground up. The dollar, for all its political baggage, offers something that alternative currencies currently cannot: liquidity. You can move tens of billions of dollars through global markets without destabilizing the price. The legal protections are strong. The infrastructure is already there. Think of it like a social media platform. Everyone complaining about Twitter is still using Twitter because that's where the audience is. Moving to something new requires getting everyone to move simultaneously, and that's incredibly hard to coordinate. That said, the shift is happening slowly and selectively. Russia has dramatically increased oil trade, with China settled in yuan. China has launched yuan-denominated oil futures contracts and is actively encouraging its trading partners to settle deals in its own currency. Both nations reduce their dollar exposure where they politically need to, especially when operating under US sanctions, while still using dollars where it's simply more efficient and convenient. This is not a revolution. It's a gradual erosion. And the question hanging over the entire global economy is how far that erosion will go before something fundamental changes. If you want to understand the other major weapon China is using to challenge the dollar's global dominance, you'll want to watch the video right beside this one. It covers how China is quietly reshaping the gold market to build financial leverage against the United States, and why that strategy is sending gold prices to record highs. See you there.